Hello, Anthony.
Hello, Claudine.
So today we want to talk about IRS seizures. We have people contact us quite a bit, and they're concerned with good reason, I'd say.
Yeah, I would say so.
So we want to talk about how does an IRS seizure happen? Will they take your house?
That's right.
If they do take your property, can you get it back? And then what about if your property is overseas?
That's right.
So let's start with the basics. How does an IRS seizure happen? What are the chances of them actually taking someone's house?
Okay, so I think first we have to sort of figure out how the IRS works generally. Well, there needs to be a tax debt. Okay, first thing, whether or not you file that return yourself or if the IRS does it for you with that substitute filed return mechanism or with an audit. So there's a tax debt, then the IRS makes an attempt to collect. They may make an attempt with their automated processes, or what will happen in order for a seizure to happen, a field agent needs to be assigned, and that's a revenue officer.
Okay.
So, and all those attempts to collect must have failed. Now,
will the revenue officer come out to you personally?
yes,
Okay.
for a seizure, yes. Now, something to be that there's a terms of art. A seizure is a specific thing. Some people think that when the IRS seizes a bank account, that's a seizure. Well, it's really not. It's a levy. That's what a levy is. When the IRS takes part of your pay or payment from a vendor of yours, that too is a levy. Some people call it a garnishment, but to the IRS, it is a levy. A levy is a different process that a levy can happen automatically through automatic processes. A seizure is something when levies don't work, and now a revenue officer has to get involved.
Okay. So what I mean, after the revenue officer comes out, I mean, do they just tell you we're taking your stuff, or?
Well, in order for it to happen, in order for seizures to happen, look, the seizures are a ton of work for revenue officers, and there's half the revenue officers that there used to be. So they really, really don't want to do a seizure.
Oh, okay.
So they'll willing to work with you. So seizures happen when people get cute. Maybe they are doing things that aren't exactly legal.
Okay.
Maybe they're being antagonistic. A seizure of a house will happen when it's rare. Somebody would have to be living in a rather extravagant house, thumbing their nose at the IRS, telling them I'm never going to pay you a thing.
Okay.
That sort of thing, which is going to motivate a revenue officer to do a whole bunch of work they prefer not to do. Sometimes you do get revenue officers who just get, an idea about a taxpayer that I think this taxpayer is a bad person. Whatever reason that does happen, they don't have all the complete facts, and so they might sort of come down hard. And I've seen that happen where the weirdest things could set off a revenue officer that they saw the taxpayer drove a Volvo. So they were very rich. And I drive a Volvo. They're nice cars. But, it's...
Now, what about the article we saw last week? There was an ex-IRS employee lying about their assets.
Right. So that's sort of where a seizure could happen, too. So there was an ex-IRS employee who was doing, I guess what we do, some of the tax resolution work. He also had some very cute ways. He ran up, allegedly, because I don't think he pled guilty to this, but 90% of the cases, there's going to be a plea agreement. Allegedly, he hid his own income. He didn't report his income. And then when the IRS did say, hey, you owe us some money, he took steps to lie on a financial statement. And so if I was the IRS revenue agent or revenue officer who saw this lie, I'd be ecstatic because I said, finally, I can get rid of you because now you've given me a great case. I'm going to refer you over to criminal investigations. You've lied on a form. Now I don't need to bother with you anymore. And now the whole full brunt of, this is no longer civil. Now it's criminal, where it's, usually people do 3 years is a common time. And now the revenue officer can close the case out because that's really their goal. Their goal is, can I close this case out and get my manager to give me a thumbs up?
Right.
That thumbs up really doesn't have anything to do with the money collected, because we'll show you some of the auctions going on right now, and I would say the reason why they're doing it is simply to close out the case because the value's not there.
Now, let's say they do sell your property. Does that money just go right towards your tax debt, or what do they do with that?
Well, first it has to go to the cost of doing the sale, and then it goes to the tax debt.
Oh, okay.
Yep.
Okay. Now, you mentioned the auction.
Yes.
Yes.
So the auction is pretty interesting. So you'll find the auctions at the treasury.gov auctions/IRS/index. And so I'm on that right now. And this is, not the fanciest website you'll ever see. And we have basically two pictures on the front right now. We have a nice little, I guess that would be a bungalow. in Missouri. I like the look of that sort of craftsman style. And then there's a Winnebago on there too in 1998. And this is sort of where I think it is helpful to sort of recognize. Here's a 1998 Winnebago motorhome. Okay, now I can't tell if those wheels are recessed or if the wheels are missing. But regardless, and you can see the little notice that the IRS revenue officers put on here to say this is subject to seizure. You can imagine that the amount of time the revenue officer is going to put in this for a 1998 Winnebago, 20-year-old motorhome that we don't even know what shape it's in, have no idea what shape it's in. Looks like it predates all the slide outs and all the fancy dancy things, right? What are you really going to get for that? Maybe it has low miles, 28,000. Most of them do have low miles. You're not using it as your daily commuter. It says excellent condition, but still at auction, what would you get for that? $5,000, maybe. That's what I would say.
So this seems
we
like
can go to their minimum bid, and their minimum bid is $6,000. So okay, so $6,000 is probably what it will go for, and this is in Cambridge, Minnesota.
Do you think this is a taxpayer thumbing their nose at the IRS?
It could be a taxpayer who's deceased.
Oh,
and there's nothing else to go after. And the group manager for the revenue officer said, hey, look, you got to do something. It's there.
Yep.
We should take it. So it could be like that. It could potentially be a taxpayer saying, well, I'm not going to do anything. I'm going to hide. It's taken off. And, well, I still thought, you still have this. I have to do this. When, when we go through the costs and the amount that's actually going to be applied to taxpayers' bet, it's totally not worth it. It's just something you have to do. You just can't let a taxpayer get away with it. You have to go through the trouble. So it's something where, now the other thing too is the taxpayer saw this to say, hey, look, you said your minimum bid is going to be $6,000 on this. There's no way you're going to get it. You could present a reason to say this thing's worth, $2,000 and I'll give you $2,000 if you go away.
Oh.
And that would, for a revenue officer, would the revenue officer rather sell this at $6,000 at an auction or get $2,000 cash money? Ooh, they want that cash money. So that's the other thing too. Don't just sit there and take it, because the auction's sort of a bad deal for everybody, I guess, except the person buying it at the auction might be who might be. But who knows? Because there's a lot of uncertainty. The seizure is a bad deal for the revenue officer. Way too much work. It's a bad deal for the taxpayer because what they're going to get for the property is not going to be what they would get if they put a little effort into selling it on Craigslist or something. Just take something and then give it to the revenue officer.
But you're less likely to get murdered by the IRS. All right. So let's say the IRS does seize your property.
Yep.
Can you get it back?
Yes, you can.
Oh.
Now, it's interesting what is on the IRS website and what happens in reality. They say, oh, yes, you can get it back. And here's the reasons why you can get it back. You paid the property, the amount you owed. The period for collection ended prior to the seizure being issued. Releasing the seizure will help you pay your taxes. You entered into an installment agreement, and the terms of the agreement do not allow for the seizure to continue. The seizure creates an economic hardship, meaning the IRS has determined the seizure prevents you from meeting basic reasonable living expenses, or the value of the property is more than the amount owed, and releasing the seizure will not hinder our ability to collect the amount owed. Now, I'm going to say there's 1, 2, 3 of those things are sort of a hard standard. But a bunch of them are sort of subjective. They're very subjective. So who determines whether or not that's true or not? Because releasing the seizure will help you pay your taxes. So the argument's like, hey, if you don't take my Winnebago, I'll be able to sell it my own and give you more money and sell it. And then the revenue officer could say, I don't believe you.
Right.
No, because I gave you an opportunity before you didn't. So no, I'll just go ahead and seize that. And with now with economic hardship, the seizure creates an economic hardship, meaning the IRS has determined the seizure prevents you from meeting basic reasonable living expenses. This applies in primary residences. And you could say that, for instance, let's say that that has happened when people live in extravagant homes. It's their primary residence. The IRS looks to seize it. Because it's like, well, you don't need a $1 million home to live in. You could live in a $200,000 home. Right. And for that kind of home, they wouldn't bother. But when you get up to $1 million, they're saying, kind of luxury living here. And it's a bigger house than theirs. So that's what's most infuriating. So that's where now the argument, you say, well, you can't seize my home because if you seize my primary home, that's $1 million. Well, where am I going to live? And they'll say, well, what you could do is you could sell that home and now buy a more modest home we won't bother you about. Just give us the additional proceeds from that. But what had happened before is like usually the revenue officer has already tried that. I already told you that would be the IRS. The revenue officers can't always tell you exactly what to do, but they could say, this is what's going to happen, so you figure out the solution to it. So I've given you ample opportunity to sell this on your own and find something reasonable to live in, but you're creating a self-induced hardship, and I've just done all this work that I didn't want to do, that I really didn't want to do, and so now you're claiming hardship when you do have hardship now. You're absolutely right, you do, but we're going to keep it that way. And so that could be difficult to undo. And cases like this we've even gotten them to say, okay, one more try, because they really don't want to do it. And then we've had people not fulfill what they said they were going to do. It's just this sort of, some people, they have just some patterns that they can't break out of, unfortunately.
All right, so what if your property is overseas? Can the IRS seize property that isn't in the United States?
The IRS could take a judgment they have against you and bring that overseas to enforce it. There's overseas judgments can be enforced overseas, but there's a few things that would have to happen. Now there are some limited examples where the IRS has a mutual enforcement agreement, but that's not what we're really talking about, because those are more of levies of bank accounts or not seizing property. So what the IRS would have to do is have some judgment, a U.S. judgment, now bring it to a foreign country to enforce it, and people do this all the time with their own judgments to say, oh, you thought you were going to hide your money here. Well, no, because I hired an attorney there too to go after you. And, basically, kind of the facts demonstrate the person they're trying to go after maybe not be the most savory person. So, hey, what do you know? You got the property. Likewise, the IRS could do that, but they have some real significant problems. In the U.S., the U.S. court systems favor the IRS. It's there. It's their home turf. Some of the things they could do without a court order. So that's pretty nice. You don't really have to worry about a judge giving you a hard time if there's no judge, right? That's pretty nice. But when you go overseas, you're going to have to deal with somebody who is not necessarily on your team, and somebody with the recent Foreign Account Tax Compliance Act and the real heavy hand the IRS has had enforcing their will globally. They have such a terrible reputation, very much hated, despised, because they have this power to sort of ruin foreign banks, and I'll talk a little bit more about that in a second. These jurisdictions just simply don't want to deal with you. They'll say, well, you can get lost. And also, a lot of jurisdictions have homestead exemptions that are going to sort of not make anything you have attachable. Now, what would be different? Now, where we would say things get different is if you happen to be somebody where there's a lot of allegations. Some of them might be true.
Maybe you're in the press.
Maybe you're in some of the press, just say you're an international drug lord or something like that. The IRS has a seizure against some of your property overseas. Well, look, that foreign country doesn't have the resources maybe to prosecute you, so they could say, well, yeah, sure, IRS, you guys going to come in here and take care of this problem for us too? That's when it's going to happen, when that country you're in doesn't like you either. That's when you would say, maybe this plan isn't going to work out.
So there is a chance, but it's very minute.
Very minute. And that's really a big criticism of, we have this Foreign Account Tax Compliance Act that's imposing penalties around people, 8 million, 9 million people around the U.S. people around the globe are subject to these penalties. It's like, so they're living around the world. What now? So what do you do now? Now that you've imposed these penalties that are ridiculous, this person can just say, well, I don't have anything in the U.S., so go pound sand. And there's really nothing you could do. So all you're doing is creating these liabilities that just are never going to be enforced, and they're more just a burden around someone's neck, but you're not really ever going to collect money on that. Now, the thing they can do, is they could take your passport if it's over $50,000. So that's some nasty little leverage they have there. But for a lot of people, not all, but a lot of them already have that other passport. They have another country's passport. It's like, okay, I'll really miss my U.S. passport. And the thing is, they seize your U.S. passport. It doesn't mean you can't travel to the U.S. to visit on your other passport. There's not some sort of thing, well, your U.S. passport was taken, so we're going to take your Swiss passport. No, doesn't work like that. Sorry, you don't have that authority. So the thing to remember is there's this Foreign Account Tax Compliance Act that foreign banks have to comply with. And you would say, well, Anthony, that sort of goes against your whole thing where you say other countries in the world don't want to deal with the IRS. You're right. That's true. But the difference here is that the leverage that the IRS has on these foreign banks is payments in the U.S. That if they don't like what you're doing over there, we're going to withhold any payments coming from a bank to you.
30%.
30%. So that could be just, it's a global economy, and so much of the economy flows through the U.S. at some point.
Yep.
You could destroy a bank fairly quickly with that. So that's the one. They're doing it. Okay, it's like, okay, you got the leverage on this. Okay, we'll do it. But you don't have the leverage on that. So have fun.
Yep. Good luck.
Yeah.
All right. Well, if you are concerned about a tax debt or your passport or any of your property being seized, levies or liens, don't hesitate to contact us, 888-727-8796. You can email info@irsmedic.com. You can like and comment below and subscribe to our channel so you get more awesome tax updates. Thanks for watching.